Good morning, investors and market enthusiasts. Welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, guiding you through the swift currents of today's financial news in just a few minutes. Yesterday turned out to be quite the ride, so let's dive straight into the heart of the action. Wednesday's session ended on a sour note, as stocks took a tumble across the board. The Dow Jones Industrial Average didn't hold back, plunging over 1.4%, shedding more than 500 points. The Standard & Poor's 500 wasn't spared either, with about a 1.3% drop. Over in the tech realm, the Nasdaq Composite also found itself in the red, down about 1.2%. So, what caused this market mayhem? Well, the culprit was none other than the latest Consumer Price Index report. In a plot twist few saw coming, consumer prices last month ticked up more than expected. We're talking a 0.4% increase over the previous month and an annual jump of 3.5% in March. Both figures outpaced forecasts, reigniting concerns over inflation's stubborn streak. Now, onto the bond market where yields didn't just rise, they soared. The yield on the 10-year Treasury hit nearly 4.57% by Wednesday afternoon, marking its highest point since November 2023. The bond market's reaction underscores the growing anticipation and anxiety among investors about the Federal Reserve's next moves. Speaking of the Fed, the market's crystal ball, the CME FedWatch tool, now shows a significant shift in expectations. With around 80% of bets on the Fed holding steady in June, the odds are tilting towards fewer rate cuts this year than many had hoped for. And remember, folks, last December we were talking about 6 or maybe even 7 rate cuts in 2024. To add a layer of intrigue, the latest Fed meeting minutes revealed that almost all officials are on board with lowering interest rates at some point. However, the exact timing remains as murky as ever. Looking ahead, Friday is set to bring us earnings reports from the titans of Wall Street banking. While the street isn't expecting fireworks in terms of profits, there's a palpable sense of anticipation for what these reports might reveal about the broader financial landscape. So there you have it, another day in the financial world, filled with unexpected twists and turns. As we navigate these uncertain waters, it's clear that the only constant in the market is change itself. Thank you for tuning in to Capital Markets Quickie. I'm Endrit Cela, reminding you to stay informed, stay agile, and above all, stay calm amidst the market's ebbs and flows. Make sure to join me tomorrow morning with a brand new episode. Have a great day, everyone. Cheerio!